I do think that level's a huge bounce opportunity. I don't know if we'll get there before we get down to, we get the Fed coming in here. Yeah, so I do think there will be more rallies in this bear cycle. I think this is going to turn out to be one of the longer bear cycles that we've experienced in a long, long time, mainly because if you look at the past bear markets, they've been shortened because of the Federal Reserve printing money, right, and stimulating, and the government stimulating. So I think that without that, it puts us in a kind of a serious situation that this could be an extended bear market. Now, a bear market is never fun, but it does offer opportunities. And I do think you will get multiple big rallies, 5, 10, even 15% rallies from low pivots. But again, it's going to be a stock picker's market, and you got to be nimble.
Yeah.
I actually, so end of year, I think worst case, we're going to 3,400. So, I mean, I don't mean to be the bearer of potential negative news here, but if we actually just take a look at this chart, this is the S&P chart, the S&P 500, you can see that massive rally that you were just talking about, that bear market rally. And then look at how quickly we've given it up in less time. Now, we have hit some support right in here. You can see these little pivot points. So this does mean that there is a chance we could get a short-term bounce here. But I'm still in the camp that I think, thinking about what the Fed is doing, how they're now unloading their balance sheet, they're raising interest rates, and they're likely going to raise at least by another 50 basis points in September. I think that you could, by year end or early 2023, retest the March or February 2020 highs right here before that COVID dip. So that's my target. And again, end of year, early 2023.
Interesting. Okay.
It's more that these headlines will trigger people to say, okay, governments and maybe central banks are willing to still step up and stimulate if things get too rocky out there. I think that this is just the very beginning. And if in the article, it talks about very minimal kind of intervention. But the point is that if they're already willing to kind of come in a little bit, what happens when things get worse, and how many other central banks, how many other governments are willing to come to the rescue as you see the population start to kind of create this uproar? And again, we've seen this time and time again, how the more rough the period in the economy is, the politicians which have to be reelected, well, guess what? They just look at a 4-year span, at least here in the United States. So they're like, well, we got to print because I need to get reelected. And you'll see more and more of that. Now, I still think there's a rough road to go, but there will be a pivot point where you even see the US, the UK, Europe, Japan, they're all going to start to do this.
Yeah.
So I do think, just like we saw a jobs number that came in a little bit better than expected, kind of in that Goldilocks range, I do think you're going to see a continued kind of relaxation of the CPI numbers. And I think that's going to give the Fed that ability to say, hey, listen, we're still going to keep the pedal to the metal. We're still going to do 50 basis points in September. But I think you're going to see the economy weaken more and more towards the end of the year. And they're going to back off to the point where my guess is only another 25 basis points into year end. Now, the problem here is, number one, that's going to be viewed as very bullish for risk assets in the near term, until we slip into a recession. And the market and all the investors out there, they look around and they say, okay, Fed, we're in a recession. Come get us out of this now. And the Fed's going to say, well, it's not a depression yet, so we're not going to, with inflation still at 4, 5, 6%, we are not going to print, and that's going to freak the markets out. The market is so addicted to knowing that the Fed is like the parents, right? And they have this little kid, and they, the kid falls, and the parents kind of just catch them. But at some point, the Fed is going to be handcuffed, and I think that point is coming late this year, early next year. So, I mean, today is definitely, on a technical basis, not a great situation. Now, I will give Bitcoin credit, right? We've seen the dollar continue to ratchet up day after day after day, and Bitcoin was just going sideways. So you could actually say, okay, Bitcoin was holding up. But I look at today's up move in the dollar as potentially the straw that broke the camel's back with Bitcoin. It's just so much pressure from a rising dollar and risk assets. I mean, we've seen the stock market rolling over, and Bitcoin for the last 10 days or so has just gone sideways. So it was almost inevitable, if the dollar was going to keep going up, that at some point we were going to break down here. And you could see a nasty red candle here. Now, we do have potential support coming in around 17.5. That's going to be a big level. That's the June low. But my guess is that could be where we're headed at this point. But again, I was optimistic the last few days, looking at Bitcoin holding up and holding up for multiple days. And today's kind of like the wind coming out of the sails, if you will.
Yeah.
Penciled in only a 50 basis point in September. And I think, again, the last jobs report gave the Fed that little door opening. And I think the Fed is very aware here, right? So the Fed is aware that they can't stimulate if they push us into a recession and it gets bad. So they, even though they have to talk a tough game because they have to keep expectations high so the equity markets don't surge, and which creates more inflation, they also can't overdo it. And I think they're looking to kind of take a back step. Now, remember, they've just started this month unloading their balance sheet. So in a weird way, that's tightening as well. So they have to be really careful here not to do 75 basis points, unload $1 trillion from their balance. I mean, there's a lot here that could go wrong. And so that's where I am at, where I think that the Fed will probably start to do that 50 and then maybe 25 the rest of the year, and kind of let's see how it plays out. I think the markets have priced in more. So I think there's a technical risk asset bounce that when the markets start to see 50 basis points is only coming and maybe only 25 or 50 into year end, then the markets will say, okay, let's breathe a sigh of relief. That will be the relief until we slip into recession, when they're like, oh my goodness, now how do we get out of this?
Bring that, the big question I have for you is, if we were to penetrate the 17K resistance level, I think 17, whatever it was, I think 17.26 or something. Where is the next stop for Bitcoin? Because I'm thinking there's a couple of things that could pressure this down, maybe some trouble with ETH merge, possibly bad CPI or not as good CPI numbers, all leading in. Or do you feel like we might see a small flash crash that we're in right now in the short term before the end of September numbers come in?
Yeah, so I do think there's a chance of a flush. And I think the key here is understanding there's a few different things that are mixing. Now, if we take out the 17.5-ish low here, there's not a lot of support until you get down to 13 to 12,000, which is my high-end target for Bitcoin. And the kicker here is we have to remember there's still 150,000 Bitcoin, I think, from Mt. Gox that could be unloaded at any one time. That's a lot of Bitcoin, especially when you're at these lower prices for pressure. In addition, I think you have to be very aware that at some point we're going to get news from the judge in the Ripple case. How is Gary Gensler going to say that, you know, all these other coins are securities? What rules do they have to kind of abide by? And I think all of these combined with a strong dollar leave Bitcoin and other cryptos very vulnerable to a kind of one of those bigger quick flushes that could take us down to that level. So I do think that level is a huge bounce opportunity. I don't know if we'll get there before we get down to, you know, we get the Fed coming in here in late September, but I think it is a possibility.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.